Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic morning so far. Hopefully your trading's been going well. I know we've got some good trades from last night to talk about, so we'll get into that. But let's go ahead and jump into our disclaimer. So as always, I need to remind you about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you're to lose money. So make sure that you're doing that every single time that you take a trade. All right, guys, so let's do this. I guess, first of all, we could look at bankers close opportunities, and then we'll recap some of our trades that we posted last night in addition to some of our swing trades. But let's actually go over the euro pound is technically an opportunity. I know we're already in this long for a swing trade, but it also matches in terms of a banker's close opportunity. So you could take this one as well. But we're already in it. So, but that's the only one I really would feel comfortable with, and it's the one I'm already in. So if you wanted to double up, you could, but it's already a trade that we're taking. So just going to go ahead and leave it like that. But what I'd like to do is recap some of our trades from last night, because we had some really awesome trades. In fact, this is actually the worst trade we have, and it's the only trade that's losing right now, and it's down seven or eight pips right now. That's the worst thing we have going on. Everything else is in the money, which is really, really exciting. So last night, most of you probably saw it, but I posted these three trades right here. Here's this Aussie franc short, and it was a sell limit. So obviously we're waiting for the market to come up to this price up here around 0.62118, and then looking for it to go down from there. And we took this trade with the Swiss franc. This has been our best trade, I think. We were waiting for the market to come down to this liquidity right here, and then buy as soon as it comes into this liquidity zone, and then we would wait for the market to go up from there. And we'll talk about that one because that one's I think our best one at the moment. So we'll take a look at that. And then there's this one, and this is, like I said, the only one that's losing right now, and it's down 6 or 7 pips. And we waited for the market to pull into here, into this liquidity zone, and now it's on its way up, which is exciting. So we'll go ahead and take a look at each one of these. And there's a couple of other trades that I'm thinking about taking this morning. A couple of you actually reached out to me and said, "Hey, what do you think of this trade?" And I was really excited because some of you reached out and said, "What do you think of this trade?" And it was already a trade I was thinking about. So I know we're on the same page, which is really exciting. And that means that we're all kind of trading in synchrony, which is awesome. But yeah, so let me just kind of recap this one first, and then we'll move on to the other two that we have open. Like I said, you could double up this one for a banker's close trade long, but I'm already long, so I'm just going to leave what I have be. Like, I'm fine with what I've got. But basically, here are the steps when you're taking these trades. So the first step is to identify, I guess we could look at sentiment, but I guess in terms of trading supply and demand, the 3 steps are what? Number one, you want to identify where structure is, right? So that's what these yellow dots are here for. You're identifying where a major support or resistance level is located. And sure enough, this is a break of the structure, which is BOS, right? And it occurred right here. And so the market broke above that, right? And then it started pulling back. And what we want to do is take a counter trend trade, not counter trend, it's actually with the trend technically. But we're looking for a move back up in the direction of this trend when the market pulls into liquidity. So this is absolutely a liquidity zone. And the reason for that is because whatever orders took place inside of here, whatever happened inside of this area is what ultimately led to this market breaking to the upside, okay? And breaking a structure. So we know that there's liquidity, we know there's buy and sell orders in here, and so there's a good chance you're going to get a bounce somewhere in here. Okay, so that's why we took this trade, and that's why we've taken pretty much every single other trade that we've been taking. And we'll take a look at all the other ones. This one so far, like I said, we're down 7 or 8 pips or 6 pips on this one, and we're just waiting on it, and there's nothing else we can really do, just wait on the trade. But yeah, it looks good. Otherwise, it's a good trade. Outside of this analysis, in terms of supply demand concepts, as you guys know, we also take a look over here at the sentiment index. So we want to find out where is dumb money trading. And you can see here that the euro pound is towards the bottom, and you've got on the euro pound right now, 74% of traders are short and 26% of traders are long. And that presents us with an opportunity. Okay, so we're looking for long positions because we want to go against what the average trader is doing. Okay, now what this also means, and this is what I wanted you guys to think about yesterday and the day before, which is basically, if you think about it, if you've got 74% of traders, or we'll just call it 75, who are short, what that means is at some point those traders are going to have to do what? And I know somebody can answer this for me. Answer this in the chat box. If 75% of traders are short, what are each one of those going to have to do at some point in the near future? I'll let you guys answer. I know a lot of you were here yesterday, so yep, that's exactly right. Yep, they're going to have to buy. That's right. So every single person, think about the USD CAD right now too. If 95% of traders are short, every single one of them is going to have to buy at some point. And a lot of them are going to have to buy at a premium. So they're going to have to buy at a higher price, unfortunately, to close out their short position. And for those that are lucky, they'll get at a lower price. So we've kind of created an edge where we find supply demand zones where this is most likely to take place, but we're only trading the currency pairs that are likely to have that phenomenon take place, right? So the euro pound is a prime candidate because you've got this overweight in the short side. And at some point, these traders are going to have to flip to the long side, which means when you come over here, you should start seeing in these liquidity zones, you should start seeing the market pull to the upside, because again, the market's not going to let, the big banks are not going to let these retail traders just have their way with the market. They're not going to let them just all get out. Now, if you're a retail trader and you were short last night, obviously you did okay, but it's probably time to get out because I do not foresee this thing continuing to drop and then just let all the retail traders just win. That's not going to happen. So I do think this is going to pop up here. Now let's talk about some of these other ones. So this one is just a good example. Let's talk about some really cool examples. As you guys know, we have this position on this franc yen that is just doing insanely well. We did just super great on this trade, right? And it's so far so good. This is actually the type of trade you could probably bring to break even at this point if you wanted to, or at least significantly cut that stop loss at this point. But a couple of things I really want to point out here, guys. This is basically like an overnight trade, swing trade, whatever you want to call it, intraday. That's kind of my bread and butter. I take trades that I set up at night, and I've been doing this for like 10 years. Some of you guys used to follow me at the other company I used to work for. And then you found me later. And you guys know I've been trading overnight in Forex for nearly 10 years. And I've just really perfected the way I do this now. And obviously this is a really, really great trade. I mean, last night the market was up here and it basically just came down, wicked us into our trade, and then now has come up, which is awesome. It's pulled back just a little bit from its high from like 15 or 30 minutes ago, but still it's much higher from where we started. I mean, this from our entry to where it is at the moment, that's 37, it looks like 37 or 38 pips of profit. And the worst drawdown we had on this trade was about 14 pips. So this is pretty dang good, actually. Already it's been pretty dang good. Now let's talk about this one in a nutshell. So besides looking at sentiment, let's go through the 3 steps, right? What are the 3 steps? Number 1, you have to identify where structure is, okay? So I identified this area as a major structure point. You can kind of see that it used to be resistance right here. It used to be resistance there. Used to be kind of a stopping point right here. And it was a support level right here. And there's a few other things throughout here, but these are the most obvious points of structure, okay? And it's also the most relevant because at the time when this structure was formed, this is where it broke. It broke right here, and that's the break of structure. So that's step 2, is finding out where the break of structure took place, which is right here, okay? And then the 3rd step is to find what caused the break of structure, who did it, basically. And this is where you put your investigative eyes on, you start looking for clues, right? And you could argue that maybe this caused it right here, this little area. And I think that area would have worked for some trades back here. But the real engine that created this big leg to the upside took place in this general area right here. Okay. Really, I guess you want to break it down. It's kind of like this little thing right there is honestly what led to the final, okay, here we go. And sure enough, that's where the liquidity is. Now, I just included this whole pivot right here as the leg, which obviously works, which is why I'm saying at this point, you could totally afford to bring that stop loss in. There's no reason to, you don't need to have such a big stop loss anymore. We've won. We've already won. Okay, I know we haven't closed the trade yet, but we already won, right? So you can bring that stop loss in. But why is this liquidity? That's what I wanted to touch up on again. And a lot of people kind of look at this like, why is that liquidity again? And again, you'll typically find this. You're looking for clues. You'll find it where, I guess you could almost follow it backwards. That's a good way to look for it. So once you've identified where structure is and where the break took place, kind of follow the market backwards and find out, okay, where is the consolidation or the accumulation phase that created this big long leg that ultimately led to the break of such strong structure? And so you could break it down and say, well, it appears that maybe this thing alone did it. Or if you wanted to just say that thing, and then I just included basically where the pivot started. So I just said this whole thing is accumulation right here. Whatever accumulation took place in there is what created the breakout, which led to this big long leg that broke structure. So that's liquidity. And why is it liquidity? It's because there's a significant amount of buying and selling or buy and sell orders in that area where there's an imbalance of trades. So that's where the imbalance concept comes in. So there's an imbalance because if you think about it, there's a lot of traders out there, including banks, who are sitting in drawdowns. Maybe let's say a trader somewhere around the world sold right there instead of bought. Obviously, in hindsight, that's a terrible place to have sold, but obviously there's somebody there. Somebody's stuck in there and they've been weathering this drawdown for so long. And then the market finally comes into this area and they're like, oh, great, I can finally close at break even. I think I'll take my opportunity. And so what that does is they switch their trade. They went from short and now long because they covered their short position. So they had to buy the market, right? That whole concept we were talking about. If you're short, eventually you're going to have to go long. If you're long, you're going to eventually have to go short. And everybody has to do that. Whether they realize it or not, they're going to eventually take the other side of that trade. And so there's an imbalance, right? So that imbalance exists in this area. So there's a good chance you're going to catch a reversal if the market ever were to come into this area. And that's exactly what happened. It basically just tapped us into this liquidity and immediately went up. And that's exactly why, you guys have already seen it. But when I posted the signal, I placed a buy limit right there. I didn't just buy right away. because we had to get our timing right on this trade, right? Let's say we had bought this trade as soon as I, got to the computer last night. Because we looked at this trade in the COT report. In fact, for those of you that want to go back and watch, maybe go to the last, say, 30 minutes of the COT report class from last night. Watch the recording, because we talked about this trade and this particular liquidity zone as being a great opportunity for an overnight trade. So anyway, but what I was saying is, had we just bought during the COT report, we would have had to endure a huge drawdown and we wouldn't have gotten in at such a great price. We wouldn't be as profitable. So your timing on this really does matter. And that's why we've been using these limit orders for a lot of these trades, so that we can actually get in at these zones. And you can see also, real quick side note, ask yourself this question. How long did the market spend in this area where you had such a great buying opportunity? Think about how many candlesticks are between here and here, and we just caught the lowest low in the last 3 days. So there's been 72 hours of trading between here and here. Yeah, it's about 72 hours. And we just caught the lowest low of the last 72 hours. Okay. And how much time did the market spend at that low? About 3 candlesticks, and this is a 15-minute chart. So we'll just give the market, we'll say, an hour. So of the last 72 hours, we picked the best hour of 72 to buy the franc yen. There wasn't any better buying price to buy at, except maybe just a few pips below where we bought in, right? And it's not luck, right? Like we did our homework, we found this trade opportunity. Anyway, it's just fun to talk about it after the fact, right? And I milk it for sure. But let's go ahead and so you can go ahead and bring your stop loss in. You can either bring your stop loss into you can go ahead and bring it just below this pivot, or you can put it at break even. I think you're fine to just put it at break even, to be honest. In fact, some of you, if you wanted to, you could reduce your trade. You could technically could just take some profit if you wanted to and leave the rest to ride. That's totally possible if that's something you want to do. Okay, cool. Anyway, we'll let that thing do its thing. Let's go talk about some of our other trades. Okay, so the other trade we have open is this Aussie franc position. Okay, so this is kind of the same type of thing. We posted this one last night. And actually, before we get into the 3-step stuff, let's actually look at the sentiment index and actually rewind just a second. So if you notice with the franc yen, you'll see right here, it's the 5th most shorted currency pair. So this is another reason why we use the franc yen as an opportunity, right? It's the same reason why we trade the euro yen, and it's the same reason why we're trading the Aussie franc, which is up here. So we're looking for extremely biased currency pairs in terms of client sentiment or public sentiment, whatever you want to call it. And then what you're doing is, since we know this, we know that each one of these traders are going to have to go in the other direction at some point. And usually it's going to be at a premium, because if you think about it, if everyone's already so short, like with the franc yen, if they're so short, they're going to have to buy, right? And that's going to create some pressure to the other direction, okay? And there's not going to be there's not going to be enough liquidity for them to be able to do this, if that makes sense. So okay, so let's go ahead and jump over to, we were talking about the Aussie franc. So if you look at the Aussie franc right now, it's actually the most bought currency right now. So for every 50 people in the market, one of them is a seller and one of them is a buyer, right? So it's an extremely biased currency pair right now. That's insane, actually, if you think about it. Imagine lining 50 people up and one of them is a seller and the other 49 are buyers. That's a lot. That's a lot. So there's this massive imbalance of traders, and all of these traders are going to have to do what at some point? They're all going to have to sell, right? And since they're all going to have to sell, that means that we're going to, there's a good chance this market's going to continue lower. Okay. Now, we're smarter, right? Like we have a method to do this, right? So we are actually looking for supply zones to take part of this, right? We're not just looking to sell at any price. Just for the record, and I've mentioned this before, I don't recommend that you just go ahead and sell so that you can go against the dumb money. That's not a way to trade, in my opinion. I do think you need to find more accurate places to go ahead and take advantage of this. And that's where the 3 steps come in, which we'll talk about right now. So let's go ahead and jump into this. So you come over here to the Aussie franc. Yesterday, the market was somewhere over here. And our analysis on this, and again, we talked about this trade in the COT report last night. So if you want to go back and watch the last, 30 minutes of the COT report, that's a great place to start to see some of these trades in action, because that's where we took a lot of these trades, was in that COT report class yesterday. So the first step is what, right? You have to identify where structure is. So yesterday we said, well, this appears to be a structure point right here. Why is this structure? Because, and you can kind of label it out, this was kind of a resistance area right here. It definitely was resistance right here. This was definitely a support level there. It was support right here. Okay. And it even acted as a little bit of resistance right here, not a ton, but definitely. Okay, so we saw that and we said, okay, this is definitely some liquidity for sure. Or not liquidity. This is definitely a support resistance zone, also known as just structure. You can just call it structure because it's support on one side and it's resistance on the other side, right? So that's structure. And then we identified the break of structure. And where did this break take place? It actually took place right here. Okay, so that's the break or the BOS, right? So it broke last night, and then the market was trending down here. So now we're looking for supply areas. We're looking for areas where the market's likely to turn the other way. Now, this trade, fortunately for us, actually had a lot of supply almost exactly where the structure broke. So this whole area right between here and here was a supply zone. So we know that for every trader long, there's one trader that's short, and all of these traders are going to eventually have to close their positions. And ask yourself this other question real quick. Let me ask you this question. Of these 98% of traders that are long, how many of them do you think are profitable right now? Here's some context. Take a look at this chart. Okay, now that you see the overall chart, how many of those long traders do you think are profitable? Not a lot, right? Not a lot. So they've been suffocated, right? These long traders are being suffocated in this market. So and I laugh just because it's just the market, and I've learned a lot. I used to trade like that. And I feel bad, but also I don't, because it's life. Like, you just got to learn, like it's their fault for buying this, right? And not taking a stop loss or getting out of that trade. It's one thing to take a bad trade and get out quickly. It's another thing to marry a trade that's killing you and you're getting a margin call. That's another story. So, and in a way, I don't feel bad for that kind of person, just because it's like, I mean, that's the market, man. Like, it doesn't care about you. It doesn't care about your bank account. It giveth and taketh. So it doesn't care if you do well. It doesn't care if you win. It doesn't care if you lose. So you might as well just learn to work with it, and learn how to manage your risk and all that good stuff. Um, Yeah, that's all I'm saying. But anyway, that's the only reason why I laugh is just because it's so obvious what they're doing. Like every retail trader is looking at this trying to catch the bottom of the market. But what's actually happening is all of these buyers are trapped in a drawdown. So what do you think they're going to do? And ask yourself this question now. What do you think the market's going to do if they give any type of breathing room to a buyer? If the market comes up even just ever so slightly, let's say you bought right here and you're down last night, you're down 74 pips and it comes up to here and you're up 58 pips, or now you're down only 58 pips instead of 74. What do you think you're going to do? You're probably going to close that trade, right? You're probably going to cover and be like, okay, I instead of losing 75 pips, I only lost 58. Okay, I'm doing better. And so what that does is it just actually it causes the market to go down even further. And then other people see this thing start to come down again and they start buying again. And it's just further cycle. Like the liquidity um and the imbalance of traders just gets even worse, if that makes sense. So what we were looking at last night is we said, okay, great. It looks like we had a break of structure here. The market was down here. I said, okay, if the market comes up and retests this liquidity zone, there's a good chance you're going to get a pullback, right? And sure enough, it came right to here. It gave these trapped traders just a little bit of breathing room. And then the market started to just fall over again on itself, right? And so initially it pulled back 20 pips, came back, retested again. And now I guess we're up 17 or 18 pips on this trade. And we're just going to let this continue to ride. But you could do the same thing with this one. This is the same type of trade where if you wanted to, you could totally, I think it's probably appropriate at this point to bring in your stop loss. You could either bring it right there to the previous apex, or you could put your stop loss at break even. I'll let you guys kind of decide what you want to do. I'm going to at least, if I can grab that again, dang it. Once you bring it to break even, it's hard to like unlock. There we go. Oh, I got it there. I can't get it to come up though. Okay, well, I'll just leave it at break even then. Cool. So yeah, that's what's so cool. At this point, you've kind of got yourself a free trade. You could either book a little bit of profit if that's something you wanted to do. Bring your stop loss to break even or just above break even. Because there's no reason at this point to keep your stop loss out there. That's unnecessary risk. You only needed that stop loss just to get into the trade, but that's it. You don't need it. Once you're this profitable, you don't need the trade, and it's already broken this support down here. There's no real reason to keep doing that. Which another thing too, I want you guys to think about this. So for every buyer, if you think about it, for every buyer on here, this is another thought I had. Where do you think their sells are? So if you think about it, a buyer has a stop loss, right? And what does that stop loss actually mean? A stop loss on a buy is actually just a sell. That's all a stop loss is on a buy. It's just a sell. Okay. Where do you think most traders who were stuck in these long positions, where do you think they had most of their stop losses last night? They probably had their stop loss just below this support level right here. Okay. They probably had it right there because they said, this is my line in the sand. I'm going to hope on this trade, cross my fingers. Hopefully this trade goes back up. And so I'm going to put my stop losses just below that. And look what the market just did. It just wiped them all out, just barely, just wiped everybody out on this trade. And what does that do to this market? Well, it furthers the pressure to the downside. Like it actually can, it pushes the market even further down when that happens. But we also need to watch out for it. Just a little side note, because if we start to see a lot of the retail traders give up, if they throw their, let's say they throw their towel down and they just like, I give up on this trade, that's actually something we should watch out for and say, okay, maybe now, maybe this downside is over. So here's how we'll kind of monitor that. If you come over here and you see this Aussie franc go from 98% short, and you start seeing that trickle down to 90, 80%, we might start see that might be an indication that maybe we're flipping and these retail traders are throwing in the towel, right? The other thing we'd want to watch out for too is it's stop hunting basically. This was a stop hunt right here that just happened 30 minutes ago. If we don't see a lot of follow through here, to me, that might be an indication that this was just a stop hunt and we actually might start flipping the other way, but we'll see. It hasn't happened yet, but it's something to watch out for. Either way, these guys are going to lose. The worst thing that could happen to us is we break even on this trade. Or if you take some profits now, you're great, right? That's awesome. But that is pretty cool, guys. It's pretty cool what we've done. Oh, so the other thought is, okay, so that's where their stop losses are. So that's where their sells are going to be. But where's the other place where they're likely to close out of their buy and start going the other way? It's in that liquidity zone we talked about. So whether they knew it or not, they were going to close out of their position at less of a loss, and that this is a prime area to do it, where we entered short last night, where they were willing to get out and quit their position. That's where we were willing to start a position in the other way, right? Okay. Anyway, great trade, guys, and great work on this one. And if you want to see what's cool about this trade is here we are in the recap of the trade. We're talking about the trade, at least in terms of entering and getting into a significant point of profit on this trade. This is obviously good and fun to see it in recap. But if you want to see the trade where I'm explaining why I'm taking the trade. So if you want to have both pieces, the one that happened after and the one that happened before, I would suggest that you go watch the last 30 minutes of the COT report and see me talk about this trade in detail before it actually took place. And so you can kind of get both components there, which is kind of nice. All right, so those are all the trades that we have open. So, we got this one and the franc yen, which looks like it's up and away now even more. This is probably our best trade from last night. Literally, it just came right into liquidity right here, and it's already up 47 pips. And our drawdown on this guy was only 13 or 14 pips. That's just amazing. Literally amazing. That's really, really cool. That's really cool, guys. So again, I do think it's not a bad idea to maybe take some of your profits. I don't think it's a terrible idea to do that. In fact, I probably will too on my other account, my FTMO, my Forex funds. Like I probably will take some profits over there. But I would, at the very least on this one, you should definitely bring your stop loss to break even. Because anything below that's unnecessary risk. There's no reason to risk this at this point. We've gotten such a good entry. And again, I think that concept is really cool. And I've already talked about this before, but if the market from this liquidity to the retap into liquidity took 72 hours, if there's 1 hour where you could have bought at an ideal entry, we got that at that hour, which is really, really cool to think about. Okay, so, and then we have this euro pound long position, which I think is our only loser right now. Yeah, it's our only loser. And it is down 11 pips at this point, 10 or 11 pips at this point. But I'm sticking with it. I don't really have a reason to get out or be really nervous about it. The only thing I don't like is the fact that it hasn't just shot up from where it is right here. I would kind of suspect that this thing would just tap into here and basically go right up. So I'm a little confused by that. But I'm also looking for other liquidity zones. Just a side note, here, let's see what Sonar Lab's saying. Okay, 15-minute doesn't say anything. How about a 30-minute? Okay, so they're saying that this is liquidity right here. So that might be something we look at in the future. I think it would be worth stopping out if it came down to here and then looking for a re-entry later. If it came down to it. Let's see. But on the hourly, they're saying this whole thing is liquidity, is demand liquidity. So, I mean, in theory, you'd think it would go up right here. I mean, that's my analysis is that it should bounce from here. You know, maybe it comes down a little bit more and then bounces. We'll see. I don't know for sure. But another really good buying area, if we wanted to, would be this area right here. So if we wanted to stop out at some point, if this doesn't work, this would be a great buying area right here, like a fantastic buying area. So keep your eye out on that if this one doesn't work out. We will see. It kind of looks like it's trying to do something. You can see it's trying to do something here. So I definitely think it's running into some trouble trying to break up or trying to break down, but it's also finding trouble trying to break up too. It's just this big battle between the two right now. But I think we're great. Like we're up almost 50 pips on that Franc yen. We're up almost 20 pips on the Aussie franc, and we're down, I think, less than 10 now on this one. Yeah, like eight or nine pips we're down on this one. So it's been a good day. All right, let's look at some other trades, guys. So there's some other trades here that you can look at. So if you come back to the sentiment index, I would suggest that each of you bookmark this tool. This is a really nice tool. My friend and his company made this tool. I'm not associated with these guys. Like I don't earn any money if you buy their products or stuff. But I just like to call out cool stuff when I see it. This is pretty nice. I like how this one shows every single currency pair because a lot of the other ones like IG only shows like 14 pairs, whereas this one has all of them. And yeah, so I like that component. But I would bookmark this. Let me actually put this in the chat box for those of you that want it right here. I would bookmark it. I bookmark a lot of stuff that I use in Forex. Okay, so we can look at different ones. The one I wanted to take a look at, and this is one I think Carlos brought up this morning. He told me about this before we had talked about it. So I really think that's cool that he was able to find this opportunity beforehand. But if you look at, I think it's the euro yen, yeah, right here. So the euro yen is biased right now. It's 62% short and 38% long. And so obviously every one of these short positions are going to have to eventually buy at some point to get out of their trade, right? And so if you come over to the euro yen, there's a couple of things going on with it. It's, I guess today it's been down, or last day or two it's been down. And so we would typically want to look for buy opportunities because most people are short and we want to go in the opposite direction of what most people are doing. The thing is, I kind of feel like I missed the best entry on this, and I don't think it's too late necessarily to take the trade, but the best entry I think is come and gone. Let me show you why. So with this trade opportunity, obviously we want to look for buys, and then you want to look for number one, break of structure. So here's structure and here's the break of it. Break took place right there. And this market's just been above that this entire time. And so you want to find out, okay, well, what caused this structure to break? And it's really whatever accumulation took place inside of, we'll say, yeah, like this area right here. So whatever took place inside of here is what led to this market breaking this structure and then just going up and up and up and staying up there. And now it's pulled back, right? It's pulled back into this zone. And what's happened as it's come into liquidity here, it's actually found a bounce, right? It found a bounce this morning. It came down, it kind of went in deep, like 36 pips, and now it's all the way back up here. So we could see this market stage a comeback and actually start to go up from here. We could totally see that. I'm a little bit late to this trade, so I don't know if I'm going to take it at this point as far as the signal goes, because we just don't have the most ideal entry. But it is something that you guys should be looking for when you look at these sentiment indexes, is that you go over here and say, okay, hey, here's the euro yen. Most people are short. I should look for longs. Okay, do I find liquidity? Liquidity is here. And so last night, what would have been nice, and I think I did talk about this in the COT report, and I just never took advantage of it. I think the market was up here during the COT report, and yeah, it was like right here. And I said, maybe if it comes into here, we should buy. And I just didn't take advantage of it because it was a great little trade. And it's probably not over. I'm just letting you know. So for those of you that want to trade this, you technically could go long. What I would do is, if I were to take this trade, it just doesn't meet all my rules at this point because I'm a little late. But if I were to take this trade, I would probably, just go at market, and then I would probably either stop out at this pivot low there, like right here. At the very worst, though, my stop loss would be like right there. I wouldn't want to go any deeper than that, because if this market doesn't go up from here, you just don't want to be in the trade. So you want to keep your stop tight on this one, because it should just break out. If it doesn't just break to the upside, then yeah, just cut the trade and get out. But yeah, this could be a good little one if you wanted to take it. It just doesn't meet my rules at this point because I'm too late. Okay, let's go ahead and look at some other trades. Um, so let's look at, I'm trying to think of one that's lining up. Okay, this one I didn't take, and I'm kind of mad I didn't. It's the euro. Actually, no, let's go to the USD CAD. Look at the USD CAD. It's 95% short and 5% long. So that means for every 20 people out there, 19 of them are short and only one of them is long. And so that means that all 19 of those are going to have to find a way to get out of their trade, but there's only one buyer, right? There's only one buyer, but there's 19 other people that are going to need to buy at some point, right? So what that means is there's a good chance that the USD CAD will keep going up, because in order for these people to get out, they're going to have to get out at a premium, right? They're going to have to get out at a place that's going to attract other sellers, right? Yeah, because they're going to want to buy, and in order to buy, somebody else is going to have to sell. And so you have to get out at a place where the banks would be attracted. They'd have to be lured into that sell opportunity, but they're not going to do it unless it's a good price, if that makes sense. Okay, so we come over here and we look at the USD CAD, and this actually is in an area where I would suspect an opportunity coming along. So it actually dipped into a demand area this morning. This USD CAD did. I would call this a demand area for sure. So we might actually see a bounce from here, but I need to see it happen pretty quickly. It seems like it's starting to hang out in here, so I wouldn't like that too much. So I'm looking for other areas where this might be a good buy. So you can use Sonar Lab. Yeah, Sonar Lab saying that this is a demand right here. On a 15-minute, let's try a 30, or an hourly. Let's try, yeah, 45 minutes says that. An hourly. Yeah, that's so. Yeah, I mean, yeah, it definitely could be a demand area for sure, and maybe this is the best place to buy here. My concern is, if this thing doesn't work out, I mean, look how steep this move to the downside is. This could just go down, down, down. I mean, this is what we call a straightaway or a freeway zone right here. So when I see that, I don't have a lot of liquidity to work with right here. So I have to go back in time. I have to go back to the left side of the chart to find liquidity from the past. And actually, I think I did find, this is old liquidity right here that broke structure. So this might actually be an area where if the market pulled into this, you might actually get a move to the upside. Yeah, okay. So this is what I'm thinking is, and actually it looks like it came right into that and popped up. But this is how I would trade. Since you don't have a lot of other liquidity to work with, your stop loss could be something like that. And then this is your buying area. This purple area would be your buying area. So anything that dips into here is going to buy. Plus, if you think about it, for everybody that's long on this, where do you think they have their stop loss? Probably just below that support level right there. So I do think the market's going to try to come into this purple zone. I think it's going to try to come into there. And then at some point, you'll probably get a move to the upside after it leaves this purple zone. But this is where a lot of the liquidity is going to be. So I'm not actually quite ready to pounce on the USD CAD, but I'm actually thinking about getting a position in here. I'm actually thinking specifically, I'm thinking specifically if I had to narrow it down to like pinpoint a real solid entry, I think this is going to get me what I want right here. So something like, if you can see that candle on an hourly, I think that's where some real good liquidity is going to be. So something like that with the stop loss right about there. And then you could ride this up. Even just to these old highs is about 3 to 1. Something like that would be good. Yes, Kevin, we do use it. And technically the euro pound trade is a banker's close trade today. I mentioned that at the very beginning. So you technically could buy the euro pound and double up that if you wanted to, and look for a banker's close opportunity with the euro pound. But since I'm already long on it, I'm not looking to double up. I'm just going to keep the position I already have. But yeah, great question, Kevin. Anyway, let me go back to this USD CAD. But this is kind of what I'm thinking right here. Basically, if you can't find a real solid liquidity zone because it's accompanied with a huge move to the upside like this, you have to go back in time to find where old liquidity was. You have to go find this zone. And for me, the last time, okay, this is kind of far on the 15 minutes, better on the hourly. This was the last area that caused this thing right here, caused a massive breakout, because whatever took place in here created a break of structure here. This was a structure point, and it broke that, and it broke also structure that was down here. So this is a huge liquidity point for sure. And so for me, when I come and look at this USD CAD and I see this, I look at this purple area and I think, oh, okay, this is definitely a good buying area right there. That's going to be a great buying area. So I actually think I will place this trade as a signal for you guys, and I'll take it in my own account as well. But this is going to be a great little setup. And like I said, most people's stop losses are just going to be right below this right here. Guaranteed. Most people have their stop losses there. And that's going to be just about perfect for a buy entry when everyone starts stopping out. They don't realize that this is a great liquidity zone. It's a historical liquidity zone just below everybody's stop loss. It's a great little area. So that's what I'm going to be looking for on this one. Yeah, that's going to be a great trade. Just that alone is 3 to 1, almost 3 to 1. This setup right here that I've got for you. It's possible we could look for some areas that are even higher than that. Like we could probably even send this even higher, but we'll see. We will see. 2 to 1's easy on this one. This one should be easy to get 2 to 1. Should definitely not be too hard to get at least to there. 1 to 1 would be here, but I think you're cutting yourself way too short if you're only going 1 to 1. there's definitely more to that trade. So, all right. Let me actually write this down because I definitely want to get us into this one. I want to get us into this trade. So I'm going to write this down. I think we have time to look at one more trade. Oh yeah, I was looking at this Euro Aussie. I think this one's already gone though. I think it already took off without us. But let's take a look anyway. Yeah, it did. Dang it. Okay, so but just for kicks and giggles, right? So this one, Euro Aussie, actually back up for a second. Why am I looking at this one? Out of all 28 pairs, why am I looking at this one? Because it's also in a super biased currency pair, right? You've got 88% of public money is short and 12% are long. So that's almost like saying if you lined up 10 people, one of them's willing to buy and 9 of them are shorting. And so, and this is current holdings, right? These people have already taken their jabs at the market. And all 9 of those people at some point are going to have to buy, but there's only one buyer in the marketplace. So they're going to have, the only way you're going to get more buyers is if you attract more buyers, right? You have to attract those buyers. How do you attract more buyers? It's the same thing with any market. Think about it. If right now we have this housing market right now, right? You know, last couple of years it was going up and up and up because there was too many buyers and not enough sellers. We're seeing that flip a little bit, right? Most, not every housing market. I'm just talking generally here in the United States. It's kind of flipped a little bit, right? We're starting to see home prices come down a little bit, mainly due to the fact that interest rates have gone up 3 times what they used to be a year ago, right? And so how do you get your home sold if you're a motivated seller? You're going to have to sell at a lower price, right? So if all these people are sellers right now and there's only one buyer, how are they going to get out of their position? They have to attract more buyers. So you got to bring the market down to get more buyers into the market, right? And so that's exactly what we're saying is going to happen on that USD CAD. And that's exactly what happened already on the Euro Aussie. So I'm kind of mad at myself. I didn't grab this trade. But this morning, about 3 hours ago, as you can see here, this Euro Aussie was down here in the pits, right? It was down here retesting some liquidity right through here, was retesting this liquidity. And there were, 9 other sellers and 1 buyer. And so I was thinking, oh, great, it's pulling back. This is a good buying price. Let's look for a market to go up. And sure enough, it's pulled up from its low down here to this high over the last 3 hours. It's up 60 pips, right? So pretty big move. But yeah, could I look for another opportunity? Sure, I could definitely try to find another opportunity with this. But I kind of missed the one I was hoping to grab on this one. It's fine because we took advantage of that basically through the Aussie franc. Going short on the Aussie franc is similar to buying the Euro Aussie. It's a very similar trade. Looks like you might find some liquidity again right here, and then you'll definitely find some more down here. So if we could get the market to pull into one of those 2 areas, that might be some good. Those might be good buying opportunities. All right. Anyway, so that's my recap. But I think at the very least, guys, I'm gonna post a trade on this USD CAD. I actually really like this. We'll see what it does. It's already starting to go up here. But I have my eyes set on this purple area. I'm feeling really confident about this one. This area is going to be a great dip buy right in here. That's where a ton of it's hidden liquidity that they don't know about. It's totally hidden liquidity. Like people have their stop losses right there. I guarantee they have their stop losses right there. And so there's a lot of stop losses right there. And it's an institutional sell zone, or was an institutional sell zone back here. So so in other words, it's an institutional liquidity area is this thing right here. And so, and the last time the market got there, well, went straight through it the other day. So I imagine if the market pulled back into this purple area, you're going to get a great trade, like a fantastic trade opportunity. So I'll probably post that one. All right, guys, I'm going to go ahead and wrap up with that, but I do appreciate your attendance today. Thank you for coming. I'll get this recording posted up here in just in a few moments. But we'll get some other trades posted to you this morning and others tonight if we see some. But other than that, enjoy the rest of your day, and we'll see you guys tomorrow.